Good afternoon. This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. Little b for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index right now at 32,800 and change. Bitcoin is down about 7.4% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Looking at our top stories, El Salvador's Commerce Secretary is saying proposed adoption of Bitcoin won't replace the dollar. Rather, using Bitcoin will be optional with the United States, with the US dollar reigning supreme, thus clarifying President Nayib Bukele's surprise announcement over the weekend that he will push Bitcoin to become legal tender in the country. Meanwhile, who's buying the Bitcoin dip? MicroStrategy boosting its planned bond offering to $500 million, according to Bloomberg, after announcing earlier this week the business intelligence firm will offer senior secured notes to raise funds to boost its Bitcoin holdings beyond 92,000 Bitcoins. At the same time, MicroStrategy sees an impairment loss of over $280 million in the second quarter due to Bitcoin's volatility. Finally, federal officials recovering about half of the 4 million Bitcoin ransom that Colonial Pipeline paid to hackers during a ransomware attack, according to the Department of Justice. Redacted reports show an FBI agent tracked the Bitcoin and seized a wallet where the recovered money was sitting. Colonial Pipeline CEO Joseph Blount spoke before Congress today, discussing why the energy firm paid the ransom. And joining us now to discuss is Michael Daniel, President and CEO of Cyber Threat Alliance in Washington, D.C. Good to have you on the show, Michael.
Yes, thank you for having me.
All right, so Michael, you were the former special assistant to President Obama and cybersecurity coordinator on the National Security Council staff. You led development of national cybersecurity strategy and policy, so you have some authority on this subject. Now, the Bitcoin community often preaches that Bitcoin is unconfiscatable. The government can't take it away from you, can't take away your Bitcoin. Yet, it appears they were able to take it away from these hackers. So what do you make of that?
Well, I think if you look very carefully at the affidavit, what it indicates is that in addition to simply tracking the Bitcoin, the government also had access to a password for that particular wallet. And I think it's the combination of tracking the transactions and that access, which is what enabled the government to take the action that it did.
Right. The password, the private key. How do you think they may have acquired the private key of these hackers?
Well, that could have happened in any number of different ways. For one, they could have had access to some of the hackers' networks. Some of the hackers could have been sloppy with their tradecraft and reused a password from another instance. There could have been an informant on the inside. There's any number of different ways that the FBI and other law enforcement agencies could get a hold of that kind of information.
Mm-hmm. One of the theories put out there is that the government could be running its own Bitcoin mixing service.
It's possible. I find that a bit of an extreme theory, just generally given where the government resources are and other things like that. But as you saw from some of the news over breaking this morning about some of the encrypted app services that the U.S. government and the Australian government were running to target some other kind of organized crime, it's always possible. I don't think that's a very likely possibility, though.
Mm-hmm. Well, it did seem these hackers were a bit sloppy in the sense that they were really confident. They didn't even bother to move the money from the Bitcoin wallet the funds were initially sent to by Colonial Pipeline, at least with half of the funds. But the federal officials, they say they recently launched a ransomware and digital extortion task force in response to a surge of cyber attacks. I wonder how sophisticated is the government in digital assets? Are they prepared? Are they underestimated perhaps by some cyber criminals?
I actually think so. The degree of expertise that is resident in the government from not just the Justice Department, but from the Treasury Department and from other agencies in the government, like the Commerce Department, there's actually a pretty wide range of expertise that the government can draw upon. And so I also think that given the use, the overwhelming use by ransomware extortionists using cryptocurrencies, that the government will also increase its understanding and expertise in this area very rapidly.
Mm-hmm. Well, one other, calling out there is that perhaps banning Bitcoin could solve the problem. What are your thoughts on that?
I think that is that's not a very workable idea. I mean, Bitcoin in reality, when you think about it, it's math and encryption, right? It's processes, and you can't really ban that sort of thing. Moreover, right. I think it's also silly to try to ban something that's an innovative financial product. Now, I do think that imposing some additional rules on how that product is used and how the currency exchanges manage their business processes, those are things worth looking at. But the idea that we're going to be able to get rid of cryptocurrency itself is foolish.
Yeah, I guess there is a thought out there that you can actually ban it, but it's like banning the internet. You'd have to shut down the whole internet in order to do that. But I want to get at cybersecurity and the threat of cyber attacks. How is that the biggest threat to the United States right now? Cyber attacks, cybersecurity. How much of a priority should that be made?
Well, I think it's one of the very most profound threats that the country does face. If you look at the degree to which ransomware is now able to disrupt not just our national security and our public health and safety, but it interferes with people's daily lives, right? And not just here in the United States, but globally. If you look at what happened to the Irish Health Service, there have been reports about ransomware attack on the constituent email provider to some of the House of Representatives offices, which just shows that ransomware can strike sort of anywhere at any time, and that's only one kind of cybercrime and only one kind of cyber threat. So, absolutely, I think that cyber threats are one of the most important threats that we face, and we have to put a very high priority on combating it.
And so what kind of advice would you offer to the government in combating cybersecurity, cyber attacks?
Well, when you look at what we need to do, the core foundations are there, the capabilities are there, but what we need to be able to do is better coordinate and collaborate, not just between agencies inside the government, but between the U.S. government and the private sector and nonprofit agencies. And we need to be able to structure our activities so that the actions that we're taking become coordinated in time. This concept is generally being talked about as operational collaboration. And we still need to work on how we actually make that a reality and not just an idea that's talked about in white papers.
All right, Michael, thank you for joining us and offering your insights.
You're quite welcome. Thank you for having me.
All right, that was Michael Daniel. Coming up, institutional investors are leaving Bitcoin funds, but looking for opportunities elsewhere in the crypto markets. We'll look at where they're headed.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Welcome back. Bitcoin-focused investment funds suffered record redemptions by investors last week after May's price drop soured sentiment on BTC. Investors redeemed over $140 million net from Bitcoin funds during the 7 days through June 4th, the highest weekly total on record, according to CoinShares. The amount represents about 8% of net inflows recorded earlier in the year. Investor sentiment has remained broadly negative, although there could be signs that the worst is over. As CoinShares says, investors look to diversify into other digital assets within the crypto space, such as Ether and Cardano. Joining me now to discuss is Nate Maddrey, Senior Research Analyst at Coin Metrics. Welcome, Nate.
Hey, Christine. Thanks for having me.
Good to have you. All right, so Bitcoin investment funds are being drained, yet there appears to be investment interest in altcoins. Are you seeing some of the same data?
Yeah, we've seen this over the last month, especially historically, Bitcoin has been the dominant crypto in terms of trading volume, but it's really shifted to Ether and a bunch of altcoins over the last couple months.
Yeah, I think we have a chart from Coinbase trading volume in May of 2021, just last month. So Coinbase has more ETH activity than Bitcoin, and Coinbase is popular among institutions. So does this confirm institutional investment in ETH?
Yes, so Coinbase is a mix. I'd suspect this is actually probably mostly retail driven with what we're seeing with ETH. But we're seeing this across the board with a multitude of exchanges and, as you pointed out, with institutions. So I have a feeling that the sentiment is probably across retail and institutions for this shift.
Now, are people just using ETH more because it has more utility in DeFi, NFTs, smart contracts, or is this looked as more of an investment play?
Yeah, I think the utility is definitely a big part of it, and we've seen that narrative shift as well. I think this specifically what we're seeing with Coinbase is more of an investment, though, because this is showing the pairs traded against stablecoins and US dollars. It's not including ETH traded against DeFi and other assets. So I suspect this is mostly investment, but it's driven by a multitude of things.
We also have a chart from Binance trading volume last month, and we see that both Bitcoin and ETH are having high volumes, high trading volumes, and Binance is very popular among retail traders. So what do you count for the slight difference here?
Yeah, so this was kind of surprising too, to see ETH overtake Bitcoin on Binance. It's closer than it is on Coinbase, but really if you look at the history of Binance and Coinbase, there's very few times when ETH has overtaken Bitcoin. I think something really important to note here too is the huge surge in Doge, and that's something we've seen across the board over the last month. There's been a huge surge in altcoins, meme coins, and I think a lot of the capital that was flowing into Bitcoin is now flowing into these meme coins, which is part of why we haven't seen as much buy support now that prices are down.
Yeah, there's a lot of talk about the frothiness we saw in May, and we have a chart on liquidations on BTC perpetual contracts. Maybe you can go over some of this. We see huge liquidations in the middle of May.
Yeah, so we saw one of the biggest liquidations ever on May 19th when we saw Bitcoin price fall down close to 30,000. And this was part of why the price fell so fast, because there was so much leverage in the system, basically people borrowing money to take out more crypto. But the interesting thing is that we've seen that mostly dry up since then. If you look at even the last couple of days, there's been hardly any liquidations compared to what we saw in middle of May, which suggests that a lot of what we're seeing now are people selling on spot. It's not people who are taking out leverage and borrowing, which is both good and bad. It means that hopefully there won't be as much volatility going down because there's not as much leverage out there. But it also means people are probably a little bit spooked and are selling their actual coins.
Do we have an idea of what proportion of these people are retail versus institutional?
Yeah, so these liquidations were probably mostly retail, I would assume. But if you look at certain exchanges like CME, for example, you'll see much more institutional traders on there, and it did get hit pretty hard as well.
Okay, one last chart we have is the liquidated values on BTC perpetual contracts from June 1st. Tell us what's going on here.
Yeah, so these are the specific liquidations just this month. You'll see the red bars here are longs who got liquidated, the green are shorts. So this is showing us that the market is still actually relatively bullish. There are more longs that got liquidated than shorts, which shows that more people were taking out leverage to go long. But as we saw in the last chart, there's still much less liquidations overall than happened in the middle of May. So there's much less leverage in the system overall.
All right, Nate, so what's your outlook for the next 3 months in the short term?
I think the market is still in a little bit of a vulnerable position, but I do think this is a critical time. It's a good thing that there's less leverage. So hopefully if we can kind of make it through the next month or two without going too far down in either direction, we'll hopefully be in the clear and ready for another leg up.
Are you still bullish for Bitcoin by year end?
I am, yeah. I might be a little biased, but yeah, I'm still bullish on Bitcoin long term.
All right. Thanks for joining us, Nate.
Great. Thanks for having me.
And that was Coin Metrics Senior Research Analyst Nate Maddrey. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.